What are your thoughts about the vaccine affecting the gloves production? What does that mean for the valuations? What does that mean, of course, then for the stock price?
So vaccines and any kind of medication for COVID has a lot more. So the implications are broader than with gloves. It has implications on the entire economy, for example. So so first of all, I want to say that there have been a lot of misinformation floating around. One of the things that I dislike the most is that people seem to be scared about, not about the efficacy of the vaccines, but about safety, which I can't comprehend. Maybe is some innate human fear of the unknown, right? Because some of the vaccines are based on entirely new technology. Like, for example, you have mRNA.
So conspiracies going on.
I mean, I'm not sure objectively what the reasons are, but this is, once again, not the right thing for people to focus on.
Before we begin the podcast, have you gotten your free ebook? It's called the Build a Six-Figure Portfolio Guidebook. Now, inside it, we share with you the tips and tricks to bring your stock investing skills to the next level. The best part, it's only 10 pages long and it's totally free. Whether you're on Spotify or YouTube, the link to download is in the description, or you can go to www.firl.co/FREE or www.FIRL.co/free. Hello. Welcome back to the FIRL podcast, the best place for long-term stock investors or just investors, period. Now, today we're going to get what I would say is an expert. Definitely an expert. Someone who, and more than an expert, someone who is very interested in gloves. And I think gloves has been a big topic, right? A huge topic for the Malaysian stock investing community. And people want to know, right? The PE is so low. There's been a huge crash. I think it's like 50%, 60%, something like that down. And people want to know whether this is a good opportunity. So this is the podcast for you. So now, let me introduce our guest for today's podcast. All the way from Bulgaria, he has a degree in economics from the University of Staffordshire. He also has a Master of Finance. And then currently, he is working in the internet marketing space for an IT company. And this man's name is Nyago. Now, you may have heard of him in stockbit. If you're active in a very good community, from my point of view, you would know Nyago, right? He is the gloves guy. So at least to me, right? So welcome to the podcast, Nyago. Welcome. How are you doing?
Guys. I'm very fine, thank you.
All right.
How are you?
Excited.
Excited because it's a very beaten down topic in a way, glove, and we just want to hear your views about it.
And it's interesting because we've actually never met before. Until this podcast, right? And so very excited to know what you have to say. Now, before we begin, how do we meet, right? We met again on stockbit, basically, right? And then we were on a Clubhouse chat. I remember you were sharing. I think you went on for about 5 minutes to explain your thoughts, right? And I can only imagine that's only like less than 10% of the research you've done. So now, before I begin, of course, what is your background? Like, how do you? Well, okay, I'll ask first. How do you end up in Malaysia from Bulgaria? Right? I don't. You're the first. You're the first person from Bulgaria that I know. Well, that I know in person, right? I know who Dimitar Bobatov is, but that's about it, right? and also, how do you learn about investing? How do you start? So maybe start with how do you end up in Malaysia first?
Sure. So first of all, my wife is Malaysian.
Okay.
So she's a local, and that's reason enough, I guess.
Okay. Did you meet her here?
Yeah, you can say so. Okay. Yes, it's a long story. Okay. I don't think it would be interesting for everybody to hear, you know, a romantic story. That's not what they're
But what brought
for.
you to Malaysia? That's more important.
My wife.
So you met her somewhere and then you came here.
Yeah, you can say so.
Okay,
it's a complicated story.
Okay, sure.
But yeah, the main reason why I ended up in Malaysia is because my wife is from here. She's from JB.
I see.
Yeah, I mean, I love the country very much. So, for example, a lot of people are asking us why we are not in Europe somewhere or in Singapore, for example. I've gotten a lot of such questions. And I mean, I like Malaysia very much. Like, I have told my friends that I would say it's probably, if not top 3, top 5 countries in the world where I think, you know, you get the golden middle. You're like not too developed country where you are, you know, the life is too hectic and everything is very stressful. Like Singapore would be, you know, the epitome of such a place. And at the same time, it's not underdeveloped so that you are worried about your day-to-day life or something like this, right?
That's right.
So there are not many countries. So John, for example, just now mentioned that he visited Slovenia. So Slovenia is one country that is, you know, near to how Malaysia is in terms of quality of life, for example. And another nice place where people might want to go and live. But Slovenia is like, I think 2 or 3 million people of population or something. Like it's an extremely small country.
Correct.
Right? So it's not that easy to go there, whereas Malaysia is, you know, big and diverse and you have, you know, a lot of options here.
Sure.
So how long have you been in Malaysia?
For almost 10 years now.
Wow.
And it is, guys, for those of you listening, it's proven, right? Because he's using the last. He's using the Malay.
No, he mentioned pantang.
Yeah,
I was like, oh.
Yeah, he's Malaysian.
Okay, he's Malaysianized. Yes.
Basically Malaysian.
Yeah.
Okay, fantastic, right? So then now how about what got you interested in investing and then specifically the Malaysian stock market?
Okay, so in general, I've always been interested in reading stuff.
Okay.
And by chance, I would say, when I was like in my very early 20s, I read a book called Random Walk Down Wall Street. Right? It's one of the very, very fundamental books that you read. One of your first investment books that you would read. It's not even an investment book because it's anti-investment
book. It's anti-investment. That's right.
So, yeah.
By Burton Malkiel, right?
Yeah. Yep. Okay. So I read it and some of the things made some sense.
Okay.
Other things were like, wait a second. So one of the important things that made an impression on me was, so Malkiel was saying that why there are some people like Warren Buffett that go ahead and for 50 years they are successful in their investments is because of the law of random numbers. So you can have 100 monkeys shoot darts, and then at least 1 or 2 will shoot right in the bullseye, right?
Yes.
So that's his theory of how it happened, like how you have Warren Buffett. So for every one Warren Buffett, you have 1 million people who lose from the stock market.
That's right.
Which is accurate. Like on surface level, this is how it works.
Yes.
At the same time, so by the way, the first edition of this book is from like 1970 something or something like this. So
1973. 1973.
It's very, very long time ago. Yeah. So very interestingly, Warren Buffett, a little bit later, he gave a lecture called it was not called at that time. Later on, it was named the Super Investors of Graham and Doddsville.
Yes.
So in this presentation or lecture or whatever you want to call it, so he explained that it's not about random numbers; it's about superior strategy.
Yes.
And I would say he proved it and crushed the theory in Random Walk Down Wall Street.
Right. Yes.
So that doesn't so this is what got me started. Interest in the topics. I must say that I have had very poor financial education as a youngster.
Okay.
So, for example, in Europe, you have a very conservative system. So you until very recently, you didn't really have a lot of opportunities for investing as a retail investor, right? So, for example, you can go to Euronext, let's say, or something like this. But of course, so there are a lot of problems. So many people look at Europe as a very coherent place where, you know, Europe is like, EU is like the US or something.
Yes.
It's not like this. It's very, very different. And, you know, at least until recently, so for example, you had problems with exchange rate, you know, differences.
Currencies.
Currency risk and so on. So it was not as simple to invest, for example. And even nowadays, I would say that the European stock market is not as matured as, you know, even some Asian markets.
Really?
Yeah.
That's insights to me, actually.
When I was in Slovenia, I was just telling Nyago, I actually met with the exchange.
Yeah, I remember. Yep.
Yeah, so Slovenia, I think if I'm not mistaken, they only had, I think, about 30 to 50 stocks.
Sure.
For the entire exchange.
That's like our KLCI.
Yeah.
Very normal for the small countries in Europe.
Yeah.
So you say, I know this is somewhat of a divergent, but will you say that really in terms of investing in the Europe, you're really looking at the Western European stock markets, which are, I would presume, more developed?
So there is difference between the London Stock Exchange and so there is a huge difference between continental Europe and the UK, right? So in terms of everything, basically, in terms of financial system in particular, the difference is very significant.
What do you think are the differences? What a big difference.
Maturity, you can say, because I mean the London Stock Exchange has been around for I don't know how much, like 150 years. I mean, this is the mother of all stock exchanges, right? Whereas in continental Europe went through 2 world wars. It went through a lot of consolidation in terms of so the countries were very patchy. Like, for example, until the late 19th century, you didn't have united Germany.
Yes, so 1871.
Yes. Yeah, you like and Germany is not the only state where this is for, but you know, this is because Germany is the central place of everything that's going on in Europe. So probably if you didn't have this, Germany was, you know, nowadays Germany was going to look very similar to, for example, how the Balkan Peninsula looks like or something like this, right?
This fragmented and all that.
Yeah. So I guess there are a lot of reasons. I haven't done in-depth research on what the reasons are. But in general, it's so. For example, the other day I had a conversation with a friend of mine. So he's interested in investing in property or something. So I told him that, you know, REITs are in general a good option that I like. For you know, you can say it's a direct investment in property. You have this option, and you have been having it in Malaysia for quite some time now. In Europe, yes, there are REITs, specifically German, Spanish, but you will not find a Bulgarian REIT, for example, right? So, and Bulgaria, for example, my country doesn't use the euro, although the currency is pegged. Yeah, it is pegged to the euro. But it's not using euro per se. So, and there are currencies that are, you know, totally free floating, for example. So they are not.
Wow, that's insights.
So there's a difference between the European Union and the Eurozone. So the Eurozone, the countries that use the euro, so you can have countries in the European Union not using the euro, for example. Right? So
I think Turkey, is that an example? Is Turkey an example?
So Turkey is not in the European Union.
But
so you have Europe, right? The continent Europe. You have countries that are part of the European Union, which is not all the countries in Europe. And you have countries that are in the Eurozone that use the euro and are in the European Union. And you even have countries that use the euro and are not in the European Union. So it's like, and you have also the European Economic Area, and you know it's complicated.
I think this is for another podcast. So coming back to your investing journey. So you read this book, and then you read the Super Investors Program and Dot's View. These were important readings, I would assume, in terms of your journey. My question is, how do you get interested in Bursa Malaysia? What were your first experiences and forays into Bursa Malaysia?
Okay, so in general, my opinion of Bursa Malaysia as a retail investor and my opinion that I have shared with friends who are also retail investors is that it's not a very good idea as a retail investor to go directly in Bursa.
Okay, and why is that?
So there are a number of reasons for that. In general, so in terms of how should I put it in a softer manner? So there are a number of reasons why I think investing as a retail investor on Bursa might be troublesome for most people.
Okay.
Because in many cases, stock prices on Bursa don't make a lot of sense.
Okay.
So from a valuation point of view, prices deviate from what you would consider fair value quite significantly for prolonged periods of time on Bursa as compared to more matured markets, for example.
Okay.
So this is one thing. Another thing is that what's worse is that, for example, because of some structural reasons for Bursa, or in general the stock market in Malaysia, like for example, you don't have capital gains tax. So this promotes short-termism.
I see.
So this means that a lot more frequently people will be looking at a very short turnaround for their stock as compared to other markets, like for example in the US, where you can have like a corporate tax or capital gains tax that's like
very high,
30% or something like this. So it's a lot. You would think a lot more carefully when you enter a stock and when you exit it, as compared to on Bursa, where you can just in and out, flip stuff. So for a retail investor that is not very familiar with the dynamics of the market, this can play you a very cruel joke very frequently. So it's possible that a stock can easily deviate like 20, 30, 40% from what on other markets would be considered fair value, and can stay there for a while, right? So as a retail investor, you'll be like every morning you'll be waking up with less and less hair on your head, right? So until one day you just cut loss or whatever.
So are you personally invested in the Bursa, or where are your investments today? You don't have to mention specific stocks, of course, but where would you allocate your money?
But before that, I do want to ask you, because he's a foreigner, right? Was it difficult to open a stockbroking account in Malaysia? Or is it because you already have a PR, then it makes it easier?
So it's not as straightforward as for a local, for sure. But as I live in Malaysia and as I have a bank account in ringgit, it's not as complicated as it would have been if I were living abroad and I lived in Europe or the US or something.
I see. So as long as you could have a Malaysian denominated banking account, and did they need you to show proof of income, all these kind of things?
Yeah, so depends. I think it depends on the brokerage house.
Okay.
So different brokerage houses have different levels of strictness, I would say.
Okay.
I mean, I don't want to mention anything.
No worries. Yeah, but just just as a foreigner coming in, and
it's more complicated.
Okay.
So they look at visa and my visa and my passport, when it expires and so on.
I see.
So yeah, it requires more documents than it would for a Malaysian.
How long did it take you end to end to open an account?
It's the same as
3 months, 2 months.
No. It's like a few days.
Okay, it's not so bad.
Yeah, it's not so bad.
Yeah.
Okay.
All right. Yeah. Okay. Yeah. So going back to my question, right? Like, so where are your investments today, and how would you describe your overall investment philosophy? Since you've been in Malaysia for 10 years, you've been presumably investing in the same amount of time. You've been investing for 10 years as well.
Okay, so these are a few questions, right?
Sure.
Yeah.
So first of all, the first time ever that I invested in Bursa was last year when the market tanked.
Okay.
Right.
So prior to this, you were not invested in Bursa?
No, I didn't like what I was seeing in general.
I see.
So last year when the market crashed, you can say, because that's basically what happened at the end of March. I think if you make some backtrack, and if you see if anybody invested at the bottom or even a few weeks after the bottom in March or April, they were going to be earning a lot of money now, right?
Yeah.
That's right.
But everybody was like very concerned at that time. Nobody knew what to expect and stuff like that. So of course understandable. But that's when I entered in some positions.
Okay.
Sure.
I exited them by around late May and early June because I was thinking things were going a little bit ahead of where they were supposed to be going.
Yeah.
Of course, they continued going on for quite a while later on, and I think they are still going actually.
Yeah.
I mean, right now we are for many stocks we are at valuation levels that are similar to pre-COVID times, which is I don't know how this makes sense, but okay, like we are there.
Yeah.
And I exited because I thought that the market is going over its head.
Right.
And later on, I only re-entered in late November, beginning of December.
Okay.
In certain stocks that maybe we'll talk about later.
Yeah.
Yep, definitely.
So I am currently not invested in non-Malaysian stocks. One of the main reasons is currency risk. So right now, with all the stimulus packages going, being thrown around every country in the world, it's a little bit difficult to predict. Not a little bit. It's very difficult to predict where exchange rates are going to go next.
Okay.
It's difficult to predict what governments are going to do, right? So for example, the latest news is that the Senate passed the $1.9 trillion.
There's 1,004. Everyone's gonna get $4,000 check, right?
Yes.
Something like that.
Yeah. For example, but the crazy thing is that it passed with 50 to 49 majority. So this is not something that you can predict, right? And it has it would most likely have significant effect on the US exchange rate because you are adding liquidity to the you're not just adding liquidity to bank balance sheets, for example. You are straight up injecting it into
retail. Put it in the hands of the consumer straight away.
Exactly. So this is supposed to result in inflation in normal times and so on. So it's not something that I can gauge with my limited capabilities, I would say.
Sorry to interrupt this podcast. I know it's a little bit annoying, but I want to tell you something that I think can be really helpful to you. I can tell you're really interested in the stock market and want to learn more about it so that you actually know what you're doing, especially when today things are getting more complex and complicated. That's why we came up with the Stock Investing Blueprint, or SIB. It's our signature e-learning program that teaches you how to pick the right stocks most of the time, buy and sell it at the best possible time, and manage your stock portfolio systematically. It currently has more than 10 hours of content and it's growing. You'll also be part of a group of like-minded investors that can help speed up your learning process. To hop on the program, click on the link in the description or go to learn.firl.co/courses/SIB.
I see.
So presumably last year where you start putting some money into the Malaysian stock market is when you got interested into gloves, right? And that's really what this podcast is going to be about, right? It's going to be about gloves. So I want to ask you, right, what got you interested in gloves specifically? Is it because of the crash or are there other reasons for it?
Yeah.
Okay, so in March last year, when I started entering stocks, I did not enter gloves. When gloves started going up in June or whatever, I did not enter gloves. So I only entered gloves, started entering at end of November.
Right.
Oh, okay.
So what are the reasons? First, what are the reasons for my timing, for example? So before, it's very, it's ironic because before all the news about vaccines were out there and we knew what was going to happen approximately with vaccines, there was no certainty about anything in regards with gloves.
So,
I mean, obviously, nowadays valuations and the future prospects of gloves are very dependent on the pandemic and the post-pandemic world. So without having a clearer idea of how vaccines were going to affect the pandemic, you couldn't really reliably invest in gloves. So So for example, I told a lot of my friends that did invest at that time in gloves that, they're asking me, how is it possible? Gloves are dropping for like 6 months now. These are, billion-dollar earning companies and stuff like this. Like, it doesn't make any sense. So I told them that the current drop makes almost as little sense, but less little sense than the wave of
rise.
everybody. Yeah, the rise
Yes.
last year.
Yeah.
So last year the rise was purely speculative. Nobody had any idea what was going to happen.
Yeah.
Nobody knew if the pandemic was going to end in the middle of 2021, middle of 2022.
That's right.
Nothing. So right now there's clarity, and there was clarity since I would say last September, approximately when vaccine news started coming out.
Yeah.
So clarity started coming out as well. But why I started entering late November was because of the factory news about Top Glove. Right. So that's when the market price started dropping very significantly.
That's right.
So that was when I believe it became a good opportunity.
I see.
Right. So specifically, because I'm not a keen follower of gloves. So specifically, what about that news, that factory that got you interested?
Yeah.
So it's very funny because for the 1 month between the first time when the cluster Teratai was discovered to I like to call it the JP Morgan period. So
for viewers who are not familiar, that was when the JP Morgan report started.
Yeah. So within that 1 month of time, the price of Top Glove fell by about 20%.
Yeah.
And initially, the first few days, I was actually waiting to get guidance on how much those closures of factories were going to affect their earnings potential. And they released news that it was by about 3 to 5%.
Okay.
So, how is it possible that the price can fall 20% when earnings are affected just
3 to 5%?
3 to 5%, right? So this is an obvious intrinsic arbitrage opportunity, I would say.
Right.
Another reason is because at that time already prices were starting to go down for gloves. They were, from levels that I considered approximately at fair value.
Okay.
So yeah, it was that's how it started.
Right. Okay.
And it was very focused on Top Glove, but not the other players. Why so? I mean, you've obviously, based on the article, which we'll talk about later, but you covered quite extensively the other glove makers. But why specifically Top Glove? Was it because it was the biggest market cap, or was it because?
So a number of reasons why I like Top Glove against other companies, for example, in the field. And I'm not investing in Top Glove, by the way, only, but. So, for example, a lot of people have been asking me about Harta Lega, right? So, Harta Lega has been commanding for many years now the highest profit margin in the industry.
Yeah.
They are rumored to have the best technology in the area, light years ahead of everybody else.
Yeah.
So, I think these are some of the reasons why Harta Lega's price hasn't gone down as significant.
And the valuations are still higher than the rest,
right? You can say so. So, the holders of Harta Lega are usually very, very long-term holders. So you would have a lot smaller, I don't want to call it dumb money, but it's money that, wants to enter and exit, turn over very quickly.
Yeah.
So this is the reason why it doesn't have so much to do with the company per se as with the shareholdership, I guess, and with the market prices that get discovered because of the shareholdership, for example.
Right.
So I told everybody I would be very, very happy to invest in Harta Lega, for example. It's an incredible company. It's just that the opportunity, valuation wise, is not as good as
the arbitrage is not as good.
Yes, for example. Right. So another thing that, of course, I like about Top Glove is that it's a true growth stock. So whereas hard ledger is a pretty slow mover, and it's natural because they want to do high quality stuff, and they take many years to plan and build their factories and so on. So for example, if you look at the plans, the expansion plans, hard ledger's production capacity right now is something like 38 or 39 billion glass per year. They are planning on increasing that to 44 billion within the next 2 years or something, which is great. I mean, in non-pandemic times, this is very good growth.
Yeah.
But Top Glove, just on Friday, they released their newest investor presentation. And so right now, before COVID started, their capacity was something like 74 billion gloves per annum. Right now it's 93 billion.
Oh, wow.
And they are planning to increase that to 208 billion by 2024.
It's the 1x, more than 1x.
Yeah, it's
99,
huge.
So the capacity before COVID is 35% of their capacity in 2024.
Wow.
So, there have been a lot of people that have been saying like, okay, ASPs,
ASPs.
Every selling price is like the keyword for everybody,
Yeah.
which, maybe we'll talk about this a little bit more later.
Yeah.
But, so they're saying, there'll be oversupply and demand will dry up, and then ASPs will go down from these crazy levels that they're at right now. So even if they go back to pre-pandemic times, if you have 3 times the capacity, so you'll be,
even at depressed ASP levels.
Yeah, I mean, at pre-pandemic levels, for example, right? So, of course, there are a lot of people that believe that ASPs will go down to $1 per 1,000 pieces. And I mean, I don't have anything to say to these guys.
Yeah.
But in general, capacity is increasing. So these companies are very cash rich right now.
That's right.
So for example, I did a very simple calculation a few days ago about Supermax. So Supermax, they are sitting on about 3.5, 3.6 billion ringgit cash.
It's crazy.
And let's say they continue on and they have a couple of more great quarters. Let's say, I think this is not unreasonable to think, right?
Yeah.
And let's say they increase the cash payout to 5 billion.
Okay.
And imagine if they don't do anything with that money,
Yeah.
they just keep it in the bank at 3% deposit or whatever.
Yeah.
So they're going to be earning 150 million ringgit per year, which is more than their annual net profit before COVID.
Pre-COVID.
So they don't need to do anything.
Change of nature of business from making gloves to investment holding.
For example, so this is what I argued. So if you have so much cash, you don't even need to go for gloves, right?
Yeah.
So if you are bearish on gloves as a company owner, let's say you say, oh, okay, maybe. Although I don't see any of the glove owners being bearish on gloves, right?
Obviously,
so I assume that they know the business better than me or most other people, right?
Yeah.
So they are not bearish, but let's say that they thought, okay, there will be oversupply. You just go and do something else. You invest in, in EV companies, right? or whatever. And
solar or whatever.
Yeah, like something that is just generating some income for you. It's already going to be, better than pre-pandemic times for you. And valuations have just risen by like 2 to 3 times for most of the glove companies, which, it just doesn't make
sense.
That makes a lot of
Okay,
sense.
speaking of valuations, right? So this is from website Share Investor. Correct me if I'm wrong, because I think you're more on the pulse on this. So I think right now the trailing PE of Top Glove is about 10. And I'm hearing that the for Harta Lega, it's about 17, nearly 18. Supermax is at 5, right? Supermax is everyone's favorite one. And and people are doing doing projections based on ASP, based on number of gloves produced to produce a forward PE.
Yeah.
Right. So the question I want to ask you right now is, suppose, and I'm sure you've done the math on this, suppose if ASP prices drop by half, let's say.
By half.
Paint me a picture of what that will look like.
Oh, this is the regular projection. So this is the projection that and this is something very okay. So a lot of people that did enter gloves last year in around the peak especially.
Yeah.
So they are like very concerned about ASPs. They are like, oh, ASPs must continue growing quarter on quarter and so on. So first of all, no, they don't and they won't.
Yeah. They won't.
Right?
Yeah. Supply and demand.
It's just so. It seems like people think that ASPs are just some, esoteric thing that is floating somewhere out there. It's not like this. So ASPs are just the result. Any price on the market is result of the equilibrium between supply and demand.
Correct.
Right. So it's there were people that were saying about glove companies that they are profiteering and so on. So no, they are not. This is just pure supply and demand. So if you have limited supply, like at equal supply, if your demand skyrockets, price follows it.
Yes,
it's not. It's like we are talking about pure business sense here. We're not talking about any kind of unscrupulous unique strategies that they are employing and taking advantage of people or something like this. So anyway, ASPs are going to fall.
Right.
Recently, I posted an article. It was actually based on Top Glove recently filed for listing IPO on the Hong Kong Stock Exchange. So in that filing, which is like 700 something pages long, so there are a lot of excerpts from a market report of Frost & Sullivan.
Yeah.
And in that report, they give expectations on ASPs.
Okay.
Predictions. So ASPs are most likely going to fall by about 50% year on year from 2021 to 2022. And then they are going to fall further, maybe 30 or 40% into 2023, for example.
Okay.
So this is completely expected
already,
and this is perfectly fine.
Yes.
So the ASPs are most likely going to normalize around 2024 or 2025 when so supply already catches up with demand, for example. So ASPs are more important or in general, the current level of ASPs would be more important if the valuations were very high. So for example, if you have P, specifically trailing P of 15, 20, 25.
Which was the normal P for Top Glove before pandemic.
Before that, most of the gloves were trading at 30, 40.
Hapalega was on average 40, 50.
Yes. Yeah. So if it was at those levels, yes, you'll be worried about ASPs. But if the P is like 5 or 10, it's not such a big concern in general. So one thing that you mentioned is that according to the site where you were checking, the P of Top Glove is 10. So bear in mind that tomorrow they're going to release their quarterly results for the last quarter.
Right.
So they have one full quarter right now that is pre-pandemic times. So that's why their P is slightly higher than, for example, for Supermax. So for Supermax, all of the quarters right now are post-pandemic.
I see.
So it's more important, probably, especially in such cases of extreme, earnings, to look at forward Ps rather than
So, what are your thoughts on the forward Ps? Right, this is what I really want to understand. Like, what do you think? Where do you think ASPs will be? Where do you think the supply situation is going to be? And also, of course,
projections,
forward Ps.
So it's very interesting because with different companies, it might you might face different levels of difficulty at figuring all of this out.
Right.
So you need to look at extreme cases. So the extreme for Malaysian valuations is Supermax. So at least right now, right? So for Supermax, the company is trading right now at approximately 3 forward P. Consensus forward P. So it's 3. So if I wrote a pretty long post on that, how the calculations worked and so on. So I'm just trying to wrap my head around how
you need reference to it?
Yeah, I mean, we can put it up if you need it.
So Okay, so basically, how my calculations worked is that if you include the current cash of the company, and if you include the projected earnings for the next 2 years alone, this is already where the current market cap is included.
Okay, like I believe this is the
article.
This is your article, right? Is this the one?
Oh yeah, this is a quick post. Yes.
Okay.
So
do you need it?
Oh no, it's okay. It's okay.
Yeah.
So basically, what this means is that the company would not need to make a single cent after the next 2 years.
Okay.
And that would be the valuation that you get right now.
Okay.
Right.
So stop business, production, zero, zips.
Yes, the company bankrupt.
Yeah.
Right. So obviously it doesn't make any sense. So this is at the pinnacle of misvaluation, I would say, in this case. The reasons are many. So for example, we're talking with a friend about why the valuations are so suppressed right now.
Yeah.
We all know about the shorting of gloves. I think anybody who has been observing Bursa knows about this. So for example, to give you an idea of how crazy the amount of money that has been poured into shorting gloves has been since the beginning of the year when regulated short selling was reallowed.
Yeah, reallowed. Yeah.
So gloves alone constitute almost 80% of all shorting. Like the entire value of all short positions on any stock on Bursa. This just the 4 companies.
Yeah,
right.
The big 4 lah: Top Glove, Harta Lega, Supermax, and Kosan.
Yes, just these 4 companies.
Yeah.
And Top Glove alone represents 50%
of the shorts.
The short position on Top Glove represents 50% of all short positions on Bursa Malaysia.
Yeah.
So this is one reason, obviously. Yeah. Another reason is the weak sentiment since vaccines and so on.
Yep.
So recently, unfortunately, we had derivative products that were in the money. I don't want to, talking much more into specifics.
Yeah.
Which means that certain institutional investors might have had to take bearish positions on gloves.
Yep.
Due to these derivatives in the money.
Yeah.
And this actually eventually resulted in margin calls.
Right.
So the last few weeks, what you saw was a very sharp drop in price of gloves.
Yeah, I think I did to 490, if I'm not mistaken.
Supermax went almost until 4. So the cash on hand that Supermax has translates into something like 1.4, 1.5 or something. This is the cash that the company has.
1.44 per cash per share.
Yes, something like this.
Yes. Yeah, so it's half of the price
of the market price. Yeah. Right? So there are reasons for this.
Understand.
For me, it started making sense, and valuations were approximately at fair value or below fair value since November. Right now, it's just it's
even more attractive.
It's incredible.
Yeah.
So with Top Glove, because of all the things that have been happening with the company, it's a little bit more difficult to gauge their valuation and how exactly to evaluate the company. So, for example, as the leader in the glove production, basically in the world, they have certain amount of influence on prices on the market in general. So, for example, if they need to, they can reduce utilizations of their production facilities if they do want to do that, for example. So you have the Hong Kong listing, you have the factory closures, you have negative rep because of the CBP ban. So the 2 of their subsidiaries were banned last year from importing in the US. So you have one of the worries about the Hong Kong listing for Top Glove, for example, is that institutional investors from the US in particular would be very reluctant to go into that because of that ban.
CBP ban,
although, of course, from what I'm hearing, China investors are very bullish. For example, I know we'll talk about Intco in a while. So probably they will be the ones that will buy more of the IPO and the first weeks of trading on Hong Kong.
Okay. Yeah. Just to go back a little bit on the shorting, I agree. The sentiment is really bad. There's a lot of shorting and all that, but the shorting amount, even though it sounds big, 80% and 50% on Top Glove, right? what's your counter? I mean, I have a counter to that in the sense that the amount of short positions based on Bursa on Top Glove's market cap is less than 2%. You know, I'm pretty sure you know about this.
Of course.
So it doesn't really, in a way, move the market like something like GameStop, you know, because it was like 120% more than the market cap. But in this case for Top Glove, what's your answer to that?
It's a very different situation, of course.
Yeah.
So the mechanics have nothing to do with each other. So for example, on Bursa, you have a limit right now from this year on regulated short selling that is 4% of the stock of the outstanding stock on a company.
Yeah.
So the comparison is, you know, you can't make a comparison between this situation and GameStop, for example. So what that short position exploited is what I mentioned in regards with stockholdership, the profile of the shareholders of the companies. So, and then, for example, some people were asking recently why the short sellers suddenly started being interested in Public Bank or very recently in AirAsia, for example, or something like this. So I don't think because short positions in their nature are short term.
Yeah.
So they don't have a lot to do with fundamentals of the company. So they don't have to do with the business prospects of a company or an industry.
Yeah.
They have a lot to do with the potential for trading opportunities in a stock. And when you dump such large amount of money as was dumped on the glove, like for example, the first day on the 4th of January itself, almost 1 billion ringgit was worth of stock was shorted on the 4 companies just in this one day. Okay. Right? So the reason why this huge amount was needed, this market moving amount, is because you want to flush out the weak holders, right? So if obviously this is not something that we have very good visibility on as retailers, for example.
Yes, you don't have that kind of data sets.
You cannot know how much the retail holdership is. You cannot with any meaningful certainty, I would say. You cannot know how many people have entered in the last 1 month or 3 months or there. You cannot know how much of this amount is on margin. You can't know that. But the institutional investors have all of this data available.
Yes.
And this is exactly what transpired. So it took some time for example, the margin accounts to be flushed out. And then it happened the last few weeks, for example.
Correct.
So they did that.
Yeah.
And you saw, for example, institutional investors, especially foreign institutional investors and EPF, they started very aggressively going back in gloves again.
Correct.
So EPF was right there throughout the, you know, when prices were rising last year.
Yeah.
And I assume that actually their average acquisition price for some of the glove companies is pretty steep.
Yeah.
So right now they are using this opportunity very well to average down. So EPF is averaging down on gloves and they are very aggressive. I wrote a quick post on that, on the actual statistics on that. So they increased their position in Top Glove by about 12% just over the last 3 weeks.
Wow.
In Harta Lega by 15%.
Wow.
Yeah, so they are going aggressively. And the second most aggressive player is actually foreign funds. So foreign funds have been going out of Malaysia the last
few months
for a while now,
right?
Mostly. So for foreign funds, political risk is a very important matter.
Yeah.
And Malaysia is definitely not. Political risk in Malaysia is elevated to say the least. So they have been going out of most of their holdings. They are entering gloves.
Interesting.
Because I'm looking at the insiders that recently bought. Yeah, you're right. Because EPF is just walloping a lot, especially during the last week of February and March.
Yes. EPF is aggressive.
Yeah.
So okay. So for the last few weeks, specifically the last 3 weeks, the main sellers of gloves have been in the category of local institutions. Again, I believe this does not have a lot to do with fundamentals. It has a lot to do with the aforementioned derivative products.
Mm-hmm.
So they just like I don't know if you've talked about structured warrants on some of your shows.
I've actually spoken to private bankers and all that before, and they actually offered all these structured products.
No, like he's asking whether we spoke about it on our show before.
No,
we haven't. No.
Yeah. But of course, outside we've spoken to them before.
Sure. Yeah. So basically, what happened is that you have the structured warrants that would relatively rarely be in a position in the money at expiry.
Yes.
Why this happens is because so there are many reasons why this happens. For example, pricing structured warrants is based on a Nobel winning formula. So it's called Black-Scholes model.
Yeah, Black-Scholes, yes.
So in a nutshell, when buying structured warrants, you bet against the formula and you bet against the institution that issues the structured warrants.
Yeah.
So by law, the institution has the right to hedge its position, and it hedges the position by buying in advance mother share stock.
Yes.
And they have the right, perfectly fine, to start selling that stock near expiry, provided that the structured warrant is a call warrant, right?
It's a call warrant,
so
yes.
they are put warrants, call warrants. So for put warrant, if they want to, they can continue buying the stock. For call warrants, they can sell the stock to suppress the price potentially.
Yes.
So this perfectly allowed. So I believe this is the main reason why local institutions have been heavily set. Like it has been very dramatic, the sale in terms of stats for the last couple of weeks in particular, when the warrants were expiring.
Interesting. Okay, so now here's an interesting one, which is Intco.
Yeah,
right, the Chinese company. Supposedly interested. Again, I'm not into gloves, so I'm not sure. Maybe you can correct me if I'm wrong. They have already begun manufacturing gloves, or they're just interested?
So Intco have been the biggest manufacturer of gloves in China. Chinese companies in general are focused on vinyl gloves, PVC gloves. So the difference right now is that Intco are investing heavily in nitro gloves. So traditionally, most of the world production of nitro gloves has been happening in Malaysia.
That's right.
So before the show, we had a brief chat about that. Right. So Malaysia has certain advantages. You mentioned climate. So climate is an advantage in producing rubber, which is this is the material used for latex gloves, for natural latex gloves. But nitro gloves are produced with nitrobutadiene. So this is a chemical. So in terms of climate, it's not a problem for that to be produced anywhere else as well. But of course, note that this hasn't happened, right? So before the crisis, this hasn't happened. Malaysia has advantage in terms of the biggest advantage right now of Malaysia is that it already has an established infrastructure for all of this. So you have the full range of suppliers necessary for this industry to work. So for this to be built somewhere else, you need to start from scratch. So you need to build all of your suppliers of
the entire ecosystem.
Yes, you have to build the ecosystem from scratch. So this requires additional funds, obviously. In terms of Malaysia versus China in particular, so in China, fuels are much more expensive. So for example, what I'm hearing is that Intco is considering investing in some very, very high-tech facility where they can somehow use coals. I mean, coal. Yeah. So coals are, their price in China is reasonable as compared to, for example, if you go for natural gas, which is what most of the glove companies in Malaysia are using for their production. So it's some very, very complicated and expensive facility that they are planning on building. So for Intco, why they are so special and why I assume you are asking about them is because they have been releasing some news about some very aggressive expansion plans. So for example, they are considering expanding their production by 120 billion pieces of glove in the next 2 years or something like this. So obviously, in order for this to happen, they need a lot of capital. and they are listed on the Shenzhen Stock Exchange, and they are in the the equivalent of our ACE market or something like. They are not even on the main market,
right? I think it's called
I'm not sure.
It's either A shares or there's this term. I'm not very familiar with Chinese markets.
A shares are the standard China shares, the mainland China shares.
Okay.
And yeah, they're going to
the star market, I think.
Yeah, it's the secondary or whatever
I see.
market. Not the secondary. How do you call this? The sub market.
Yeah, it's like the Nasdaq in a way, or the ACE market. I think that's a better example.
For the Malaysian equivalent, for example. So they're going to list themselves on Hong Kong as well. So they need a lot of extra capital to do all that they're planning on doing. And to do that, their huge risk is ASPs. So one thing that we didn't mention earlier was that, for example, why Supermax, like if you look at the profit margins right now during the pandemic for the different glove companies in Malaysia, Supermax is the total leader in terms of profit margin.
Right.
Why is one of the main reasons is, of course, because their model is different from their company. So they are an OBM producer versus OEM for everybody else. Which so for an OBM producer or seller, you can raise your prices much faster and much more aggressively, quicker than the rest of the players. But later on, when prices start dropping, your prices are also going to start dropping faster than for the others. So Intco is also predominantly an OBM player.
I see.
So the imminent drop in ASPs is actually much more dangerous for Intco than for any other
OEM
producer, including for Supermax, for example. And why is because the only way they can justify all of these huge investments is if they can continue to churn in enormous profits at enormous profit margin year after year. So their profit margin is actually even crazier than for Supermax. The last few days, I tried to read up on their application for HK listing.
Okay.
So it's difficult to understand why, because they are not releasing a lot of... so China companies, in terms of information... Disclosure are not as great as many other companies in the world.
Yeah.
One of the things that I spotted is that their sales in China have increased dramatically.
Okay.
So, for example, before that, their sales in China were something like low single digits per year out of all of their production. So most of their production was going, for example, to the US and Western Europe.
Okay.
For last year, more than 25% of their sales were in China. So it is possible that, for example, their aggressive expansion plan might have something to do with some insider information that they have from the China government, for example. I mean, this is because China and a lot of developing countries, they start from a very low base in terms of usage of gloves.
So
for example, in the advanced countries of Western Europe and the US, you have 200 to even 300 pieces of glove used per person per year. In China, it's something like 6.
Oh, it's gone up. The last I checked was 2, but it was 2 years ago.
So it's a little bit up. They use mostly vinyl gloves in manufacturing, for example. So, but in healthcare, for example, the usage is very minimal. It's the same thing, for example, for India or Indonesia or all the very populous countries in the world. So I think that might have something to do with what Intco are doing and with their plan.
I see.
It's interesting because, and that's why I'm very happy that we talk about Intco, because most of the investors in Malaysia, they actually focus on the new players in Malaysia.
The Singapore Hearts, the SMEs.
Like HLT and all those guys.
HOT is, you can say, a supplier, but they're focusing on, for example, AT systematization or whatever. You know, all the
not into the production
massing. You know, they started. You know, since last year, all of these companies started announcing that they are suddenly building new factories. And of course, I can understand it because, as a Malaysian investor that is looking just at the Malaysian environment, this is what you read about in the news. It's normal nature, of course. So what happened is that I calculated how much the total incoming capacity from all of these new players, which is actually 19 new players in total, including acquisitions of already existing companies, by the way. So I haven't excluded the current capacity that these acquired companies already have. I include everything just to show how ridiculous this is. So the total expansion will be by about 51 billion pieces in the next 2 years.
Okay.
For all of the players altogether.
Okay.
So for Intco, it will be 120 billion for one company. So instead, for the Malaysian investors, instead of them focusing on Intco, they are focusing on all of these companies that release reports.
One quarter. No, half of what Intco is planning to increase in 1 year.
Less than half.
50. Less than half.
So once again, investors are focusing on the wrong things. So that's why it's very important to understand the strategy of Intco, or at least try to figure out the strategy of Intco. And I wrote an article on that was related to production in the United States. So the United States is by far the biggest consumer of gloves in the world. So on the demand side, the US has a lot of influence. So the US recently announced that they are going to be building up production in-house. So they're going to be building
in country
Yes, they're going to be building facilities both for the chemicals required for the nitrile gloves and for the actual gloves on US soil. And then they are going to supposedly be serving 50% of their medical needs. Okay, so they're going to be doing this on US soil. I don't know if you have heard Supermax plan to build a factory in the US itself.
The owner bought a house in Florida, right?
So this is
that was more dramatic than the factory.
I don't know if this is particularly related, but
it's preparing.
It is possible that it has something to do with that. But in general, the more important thing is that so companies that have exposure to the US in terms of an export market, they might have bigger problems than other companies. So one of the reasons why I'm interested in Top Glove more than, for example, other players is because Top Glove are exposed to the US market to a much lower extent. So for example, out of Malaysia, about 35% of the exports of medical gloves go to the US, but for Top Glove, the percent is about 20.
I see.
So this is a much less influential market for Top Glove as for other players, for example. So for Intco, the US market represents about 50% of their exports. So if you see that, you will start being a little bit worried about the companies that are exporting to the US. We know also about the US-China negative relationships, and it's not inconceivable that new tariffs might be imposed on imports from China. It will not happen right now. So it will not happen this year. It will not happen next year. It will happen only once we are, out of the muddy waters of the pandemic once and for all, specifically as far as gloves are concerned. So, but it is very likely that something like this might happen. It might be more difficult for China producers to export their stuff to the US as compared to Malaysian producers. So my overview of Intco is strictly negative, so of their prospects. So I would say that any Malaysian company, including newcomers on whose prospects I am generally also at least neutral. So in terms of Intco, it's worse than that.
I see. Okay, so you basically you team Malaysia, right?
It's not it's not geographically.
I get it. No, it's okay. Oh my god, it's actually it's coming up to an hour now. I can't believe it flew by so fast.
There was a lot of stats. That's why interesting stats.
That was quite amazing, right? So I think there's so much more to talk about, but perhaps the second podcast. But before we end, right, I want to talk to you about, I think people are talking a lot about the vaccine. Right? And what are your thoughts about the vaccine affecting the gloves production? What does that mean for the valuations? What does that mean, of course, then for the stock price?
So vaccines and any kind of medication for COVID has a lot more. So the implications are broader than with gloves. It has implications on the entire economy, for example. So so first of all, I want to say that there have been a lot of misinformation floating around. One of the things that I dislike the most is that people seem to be scared not about the efficacy of the vaccines, but about safety, which I can't comprehend. Maybe is some innate human fear of the unknown, right? Because some of the vaccines are based on entirely new technology. Like, for example, you have mRNA.
So conspiracies going on.
I mean, I'm not sure objectively what the reasons are, but this is once again not the right thing for people to focus on. People should focus mostly on efficacy and on logistics. These are the issues with vaccines. In terms of efficacy, once again, people have been focusing on wrong things, or they have been interpreting data wrongly in most cases. So, for example, one of the vaccines is Sinovac. So people have been saying, how is it possible that Sinovac has 50% efficacy in Brazil, 65% in Indonesia, and 91% in Turkey, right? So, I mean, there must be something wrong, right? But no, everything is completely right. All three of these results are right. The difference is that the tests have been conducted in different environments. So, for example, in Turkey, you have had a lot more like stricter implementation of whatever SOPs, the local SOPs there in Turkey, as compared to, for example, in Indonesia, let's say. In Brazil, you have a different variant of the virus that seems to have certain properties that allow it to escape immunity to a certain extent. So these are the reasons for why you have different efficacy rates. But the vaccine is perfectly fine, perfectly great vaccine. I think in Malaysia, if you did a test in Malaysia, the efficacy rate was going to be very similar to Turkey, for example.
Which is more than 90%.
Yes. So I think in most cases, there are no reasons for people to be worried about vaccines. Everybody should get vaccines. Your question was in regards with what would be the implications.
On the glove market,
the implications. So obviously, it's incredible that vaccines are here, and everybody is going to get vaccinated, and COVID is not going to end. So this is something that many people have to understand. So it's going to become, most likely it's going to become endemic. So the only way how we can eradicate COVID is if right now you have what do you need, 14 billion vaccines and you vaccinate the entire world in 1 month, for example. Then you can eradicate it, yes. But because the virus mutates, and it mutates towards a variant that escapes previously acquired immunity, if you actually vaccinate one part of the world and another part, eventually it will mutate to a version that to which you will need a new vaccine, for example. So it's going to be with us for pretty much forever. That doesn't mean that we are going to have lockdowns forever, for example. So this is something that people need to understand. So we are not going to see, thousands of people dying per day, like, for example, in the US, how it's happening nowadays. That's not going to be forever. Another thing that people need to understand is that, unfortunately, even though you have the vaccines, we don't have the production capabilities to produce enough vaccines for the whole world. This is a major issue. So even if you get logistics done perfectly, which we are already seeing that in countries that have complicated geographies, for example, like the US is one of the countries, actually. The rollout is slower than what was projected, for example. But let's say that we assume logistics are going to do fine. You still have the problem of production, and you still have the problem of rich countries buying up too many vaccines in advance. So, for example, Canada at one point had contracts with manufacturers for 500% coverage of its population.
5 times.
Wow. Where are all these Canadians coming from?
No, they're not Canadian.
No, he's just it's a joke. It's a joke.
Sure. So what this means is that in the end of the day, I did some calculation in December or something like this. Yeah. So you would have within 2021 enough vaccines to cover about only 25 to 30% of the population of the world beyond the few rich countries that overstocked on vaccines.
Right.
So, for example, the Economist Intelligence Unit, it did a study on all the contracts and all the manufacturing facilities and production capabilities and so on. And it turned out that, for example, for China, the most likely end of the vaccination campaign when at least 60%, we're not talking about 70 or 80%, just 60% of the population is going to be vaccinated, is third quarter 2022.
Okay.
Which is
about
still
a year and a half.
Yeah. Yes. So for India is fourth quarter 2022. And this is good news actually, because for example, initially one of the things that I was worried about personally was that India was going to lag behind very significantly. But fortunately, the government has taken some prudent measures. So for example, the biggest manufacturer of vaccines in the world is the Serum Institute in India.
Okay.
And they have reserved huge amounts of the AstraZeneca vaccine for internal usage in the country. So that's why they are able to actually get enough vaccines for them to actually be able to get vaccinated by the end of next year.
Yeah.
So again, this is about next year, right?
Yeah.
Another thing that people don't realize is that out of the top 20 most populous countries in the world, I think 15 or 16 are in Asia and Africa. And most of these countries are going to be done with their vaccinations by end of 2022, 23, 24.
So what does this mean for gloves? I guess that's my question. Does it matter at all? Because a lot of people think that it matters. What does it mean to you?
Sure. So in terms of direct effects on gloves, as we have discussed, it will result in ASPs going down. Yeah. But the drop will be gradual. So it will not be...
So it wouldn't be sudden.
It's not going to be plateaued.
Right? Yeah, it will not be reverse V-shape or something like this.
It's not a cliff.
Yes. So this is in terms of gloves, but again, as I mentioned, the implications are much broader than for gloves, right?
Yeah,
so we are going to be seeing, like for example, if you do manage to travel, if we set up a system where you have green passport or whatever that you have been vaccinated or whatever, which I am a bit worried about, maybe another topic.
Yeah.
But even if you have that opportunity, let's say by the end of this year or sometime next year, you'll still be seeing people at the airports wearing gloves. And when you go to the hospitals, so when you go to the restaurant, you'll be seeing... So, for example, in the US, you already have requirements from the CDC that are about wearing of personal protective equipment in certain industries like the hospitality or food and beverages. So this is not going to disappear overnight.
So would it be fair for me to say that so your view about ASPs dropping gradually is more of a supply increase rather than a demand increase? Am I right to say that?
You mean demand decrease?
Decrease, yes.
Yeah. So it will go two ways. So demand will be decreasing and supply will be increasing.
Which one do you think is going to be faster?
So I think supply is going to increase faster.
Okay.
And the main reason for this is because ASPs will be elevated for a while now. And companies will want to capture these higher ASPs as soon as possible. So that's why, for example, many people were wondering why Top Glove suddenly wants to go and look for 7.7 billion ringgit from the Hong Kong market, right? So objectively, the company doesn't need that because the amount of profits, pure profits, it's generating and it's going to generate. It will make this amount, unnecessary. You can say in the long run, it would be unnecessary. But the company wants to capture as much of this high demand at high prices as possible. So supply will rise faster than demand will fall. And the weird thing is again that people are focusing on demand. So they are focusing on, COVID, pandemic ends and then
it's a cliff.
And then the most frequent thing that I'm hearing is that people say, okay, pre-pandemic, Top Glove was earning 500 million per
quarter,
per year.
Yeah, per year.
And this was in the good years, like the last few years, for example. Or Supermax was earning 150 million.
Yeah.
So if the company is earning 500 million per year and the valuation is at 50 billion, this, objectively, this doesn't make a lot of sense. So it's just that people don't understand that we are never going back to how it was pre-pandemic, unfortunately. And this is not just about gloves. This is, much deeper than that.
Well, I really hate to end this podcast, but I just want to say that thanks to this podcast, I think my gloves IQ went up by about 50%.
Same here.
And, thank you so much for being on the podcast, Nyago. It's been a pleasure. Can't wait to have you back on when we get new updates. Before we end, right, where can people find you?
Yeah, where can people find you?
So I would suggest to everyone to just register for StockBit.
Okay.
In order to be able to read on StockBit, you have to be registered. So it's kind of private, and this is something that I like.
Okay.
So I am active there, and there are a lot of great guys there that share a lot of very valuable information and research. And I think it's suitable, especially for probably younger investors.
I see.
Because most of the research that is done is, for example, the guys, they are focusing a lot on tech or high growth companies.
Okay.
So
All right. Thank you so much for being on the podcast. It's been a pleasure, as I said before. And guys, for those listening, I hope you've been thoroughly educated as I was, as I'm sure John was as well.
Yeah.
And see you guys in the next podcast.
Thank you, guys.
Bye-bye.
Bye.